Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Magna Mining. Magna Mining is traded on the TSX.V under the ticker NICU and on the OTCQX under the ticker MGMNF. And I'm joined today with the CEO and Director of Magna Mining, Jason Jessup. And Jason, always great to get you on the show. We talked back in early September, but boy, so much has flown by just in the last month and a half that there's a lot of news from the company. We're going to dig into operations. We're going to dig into exploration. We'll even dig into the recent capital raise and unpack for investors all the different developments with the company. Just as a reminder for people listening in, Magna is a producing company now in Sudbury, Canada, producing copper with kickers of nickel and PGMs, platinum and palladium. And they have a lot of development projects in the pipeline, gearing up to being mine number 2, 3, and 4. So we'll dig into all that and more. Jason, I want to kick it off with the news that you put out to the market on October 22nd, and it's really just an update on Q3 production. Let's start there.
Yeah, thanks, Chad. It's been a really busy month, so yeah, lots to catch up on for sure. Yeah, so we put out our production numbers from Q3, and this is the first time we've done that. And again, being a new producer, really it's only been our second full quarter in Q3 as a producer with the McCreedy West mine. So we put those numbers out. We try to be as clear and transparent as possible. So we had in my eyes, we had a really good quarter in that we were hitting the things we wanted to get accomplished, which is really all about setting ourselves up for 2026 and knowing this asset because having operated it before when I was with FNX Mining and looking at it, much like what we talked about in our previous conversation, Shad, it needs to get the development in place. It needs to get access to other parts of the McCreedy West 700 complex deposit, namely on the west side and around the 1300 level. So really focusing on development's been a key. With that, we mined and shipped about 75,000 tons of ore, at about 1.5% copper plus nickel and precious metals and some silver. So it was a good quarter. We did have a few challenges, and one of them was with our compressed air system. We had recognized there were some issues with some of the compressed air getting underground, and we were in the process of getting the plan in place to remediate that issue. And while we were doing that, an airline failed in a raise that we weren't able to get access to, and we needed to drill some holes so that we lost 5 shifts of production approximately with that issue. But again, I think overall, aside from losing a few shifts for some power issues related to grid power, we had a really good quarter, really moved along development. Diamond drilling was great. We added a third diamond drill. Again, as we get to know the mine better and understand the opportunities and where we need to, invest more attention and some capital, we keep adapting and it's been really good. Diamond drilling was great. Development's been good. Ramping everything up. Q3 for our second full quarter of production, I think was a very successful quarter.
Yeah, absolutely was. And people have to remember you're still kind of in ramp up mode, even though you're in production, like we've been talking about in the last few discussions. You're still doing all the development work that was neglected by the prior operator just because it wasn't a priority for them. But there's a lot of opportunity as you go into the western area, not just on the drill bit side, but also on the development into areas that haven't been mined. So let's maybe go there next as far as the growth potential at McCreedy West. A lot of the exploration and development focus is heading west. And just as a reminder, you're mostly producing out of the 700 footwall copper zone. You do have that inner main nickel zone too, we've talked about before, which gives you optionality, but the west is where things are drifting. So let's talk about the opportunity there.
Yeah, so now that we've, put the right development in place, when I say the right development's going to get us out to new areas that were previously not mined by Inco or FNX or KGHM. So this western side, which is in an area of ground between, the historic McCreedy West mine that was mined by Inco and FNX and the Hardy mine, which was a Falconbridge mine that operated and closed in 1969 and is now owned by Glencore. There's an area there which we find very interesting, highly prospective, and has had almost no exploration at all for probably about a 250-meter area between the two properties um, in the footwall. So now that we've put our development in place to get out to the west side around our 910 level, that's in feet, we're drilling that area. I would say that we'll probably put out some drill results from that area as once we get, I'd say, enough of them out to give a good, clear picture of the potential. But what I've seen in the core shack is very, very encouraging. Lots of sulfides, does kind of hold true to the thesis of the opportunity we're seeing on that side. So that's really great. The other area that we're drilling with this third drill is in the higher parts of the mine, sort of above the 600-foot level in the footwall. And the up dip of that, really, there's been no mining above the 450-foot level in the footwall to surface. Now, we've done some work on surface this year where we've identified precious metals and copper on surface in the breccias, which would be the up dip extent of this. So potentially a fairly large area up dip from, it's called the 450-foot level up and also to the east and west, where this drill is now starting to test some of these areas to expand that footwall mineralization further towards surface. We may look at getting a rig on surface as well, drilling that. So that's a pretty exciting area in that close to surface, very good ground conditions, close to infrastructure, and completely unmined, untouched, and really undrilled. So that's great. The other area that we're doing a lot of drilling is down around our 1,300-foot level, and that's sort of the bottom of the massive part of the main ore body from when Inca was mining at the McCreedy West mine. The drilling we're doing there is stepping out again to the south, to the west, beyond what was mined previously. And again, visually, what we're seeing there is extremely encouraging. And this will be supporting a mine plan that we'll be mining in 2026. So it's been going very, very well. So even though McCreedy West has, started mining back in the early 70s and, mined up until 97, and then since 2020 or 2002 been mining, for over 23 years now, it still has more resources to be defined and discovered. And yeah, we're pretty excited and happy to have three drills turning there.
Yeah, it's an exciting exploration effort going on by the company at multiple levels. You mentioned the 910 area there, the 600-foot level, the 1,300-foot level. You're mining out of the 700-foot level. So lots of levels. And like you say, more prospectivity to keep finding more mineralization. The gift that keeps on giving here. Maybe just one more question on kind of an outlook towards next year. I think a lot of people want to know what's possible at McCreedy when you get firing on all pistons and when you really have the development work where you want it. You've talked that so far you've been prioritizing moving waste over the production just because you wanted to get things set up. But let's just say by 2026, next year, you're going at full steam ahead. What's possible out of McCreedy West for production?
Yeah, well, what is possible is a lot based on, our experience with the mine back in the FNX days. And again, this was mining the three separate zones. So we were mining in the 700 complex, we were mining in the PM zone, which is another footwall deposit at the mine, which currently has an NI 4310 resource of about 1.5 million tons currently. And then with the inner main nickel zone, when all three of those are mining, in 2008, FNX produced about 700,000, just a little over 700,000 tons of ore that was shipped. So the infrastructure, the mine, the deposits, have a lot more potential than the sort of, call it, 300 to 350,000 tons a year that it has been producing. That being said, one thing that is really key to our success in our philosophy and how we're doing it's about quality. So as we get our development in place and get our development ahead, it's really going to be about not producing as many tons as we can. It's about producing as much metal as we can in those tons. So what that right mix is, we're sorting that out right now, and we will be putting out a life of mine plan with reserves for McCreedy West mine in Q1 of 2026. So just in a few months. But again, it's really great is important and making sure that we can be as selective as possible in the tons that we're shipping because we pay a fixed cost for trucking per ton. We pay a fixed cost for milling per ton. We pay a fixed cost for crushing per ton. So you don't get the economies of scale by just saying we're going to increase tonnage and that's going to lower those costs. Those costs will stay the same. So by putting more metal in every ton that we're crushing, trucking off site, and having milled, does have really positive economic benefits for us. So that's going to be a theme. So I'm not going to give you a number of how many tons and what the grade will look like. We'll have to see that in the life of mine plan, but definitely focusing on grade is going to be important. And if we can see some improvement in the price of nickel and we can turn back on nickel, well, that's a game changer in itself.
Yeah, so there's a lot of nuance to it as well, like the grade-driven growth, the ability to blend in other zones, the PM zone or the nickel zone. So you have that flexibility in how you sequence things, and so a lot to follow along with. But what we can say is it's going to grow next year, so stay tuned, everybody listening in. Now, let's move over, Jason, to what could potentially be mine number two here in the not too distant future, and that's the Levack mine, a prior producing mine, a mine your team has a lot of experience with from the FNX days. You've been doing a lot of exploration. We've had a couple calls where you had some banger holes, and you've done it again. You've released some more holes to the market here on October the 23rd, and there's some high grade copper nickel PGM results at Levack. And there's a couple different areas of interest here in this old producing mine that still has the potential to be another big contributor to the future production profile. Walk us through why these results are significant and what the team's learning.
Yeah, so it's we call this our W2 hole. So it's the second wedge off the same hole that we had announced back, I think it was August 28th, where we had some really spectacular copper and precious metal grades and multiple intersections in that hole. So we've wedged off. Now, our interpretation based on two holes, which was the 14A drill hole that we released back in July, and then this one in August, our wedge one hole. So we had an interpretation based on that that was, somewhat supported by some geophysics. So we drilled our wedge two to test about 40, 50 meters to the north at roughly the same elevation as wedge one. And that would just give us some sort of strike extent to this target area we're calling R2. What we learned from it is we hit the mineralization about 50 meters higher in elevation in that hole. And we hit four discrete separate veins. And these veins varied from very nickel rich, high precious metals as well vein to some copper rich with 19% copper and I think 24, 26 grams of precious metals. So we're seeing what we're identifying and interpreting as a transition zone where our 14A drill hole had very high nickel with precious metals. We had about 8.5 nickel with about 17 or 18 grams of precious metals. And now this hole where it intersected is about 90 meters, but 270 feet approximately below that intersection. We're seeing a very nickel-rich vein, which we're interpreting as the same vein, but hit 50 meters higher than we expected. It's grading about 12.5% nickel with, I think, about 5% copper and again, 24, 25 grams precious metals alongside some other copper-rich veins. So it's a transition zone. And the other thing, because we've hit it higher, obviously there's a different interpretation on the orientation of these veins. And it looks like there's at least two different orientations. So it's a much more complex system, which is good because complexity often results in very good grades and where you can get these traps and get, blowouts in the mineralization. Seeing it up above, 50 meters above, about 30 meters above and about 50 meters above, 40 meters to the north of our W1 hole. Again, very encouraging. We're starting to spread things out in this zone. Still only our third hole that we've got assays back for. So yeah, the interpretation is growing and we're starting to understand. It looks like there's some steeply dipping veins, a very good high grade base metals with precious metals, as well as some flatter lying veins. And this kind of ties into what traditionally in the north range of the Sudbury Basin you'd expect from footwall deposits, which are more of these flatter lying structures that are subparallel to the contact nickel. But we're seeing both that style of mineralization with these deeply dipping veins that are probably also structurally related. So yeah, it's an evolving exploration target. The grades are great. We're super encouraged by the precious metals, and we've got our silver assays back, which took a little longer, even from our wedge one hole, but seeing great silver grades up to 190 grams per ton of silver. So yeah, very encouraged by it, and still very much, interpreting and exploring this R2 target area. But I'm super excited about it, and it's based on some of the other footwall deposits like the Morrison deposit, which is about 600 meters to the west, and Valley's 153 deposit, which is about approximately a kilometer, 1.2 kilometers to the east. And these are big deposits, multi-million ton deposits. It's a pretty exciting area to be exploring in this really untested part of the footwall.
Yeah, it is pretty exciting because it sounds like you say, you have multiple veins, multiple orientations. Some are more flat, some are steeply dipping, some that are more high percentage copper, some that are more high percentage nickel, some big precious metals hits in there with the PGMs, gold and silver. And so it's a nice mix. And like you say, complexity is good. So as you continue to explore Levack, you keep finding different pockets of interest. We had talked last time about what could be the extension of the Morrison footwall and the number three nickel copper zone and some of the other areas in addition to the main nickel copper zone that you have. So all of this is tying into a restart study that you're working on at the Levack mine. Maybe tell us how that's going and what the timeline is as far as coming out with that study and what that projects to.
Yeah, so this R2 target has made us relook at our restart study. We've been really, up until the last month or so, really focused on a ramp from surface to access keel zone, number one ore body, number two, the main ore body, the intermediate ore body, those upper zones that are above the 1,800-foot level at the Levack mine. And these are areas that historically were mined by Inco, a little bit of mining done by FNX, but never having a ramp access to kind of tie it all together. So that's what we had been focusing on, and we've been talking about this year. Now that we're getting some we consider really exciting hits down around R2, and we're looking more at that area of the footwall below the 2650 level. We're pivoting a little bit with our plan and saying, okay, we need to incorporate the shaft in being able to hoist some of this potential, ore down at depth. And how does that tie into our restart plan? And so we're working through that right now. That's going to change things a little bit. We're also going to be announcing a new resource, an updated compliant resource on the entire Levack mine sometime before the end of the year. And with that, then we're going to really look at not just the upper part of Levack mine in a restart, but look at a complete restart and what's the best approach, including shaft and potentially ramp together, and where would we want to start and how that would look. So a little bit of extra work to do now on that. So we won't be putting anything out this year. We're gonna, pivot and try to include potentially some deeper production in that restart plan, and potentially that may be some of the first ore we'd want to mine. So that work's ongoing, but I think everyone should pay attention and watch for this updated resource that'll be coming out before the end of the year.
All right. Well, we'll keep our eyes peeled for that resource, and we'll just get you back on when that comes out, Jason, to have you unpack it for listeners here. But exciting to find so much good drill hits at depth that you may have to relook at the plan and say, hey, there's so much pay dirt down here, it may adjust the sequence. So that's actually a good problem to have, and the whole point of being aggressive on the exploration. And let's get into the budget for all the work that's at hand. You just announced to the market back in September the life financing. I think it was $45 million. Now, we had a lot of questions that came in, Jason, about what the funds will be used for. I think it's pretty obvious there's a lot of development and exploration work going on, so we can get into that. But I even had people sending in questions speculating on if this was for more M&A, and you have done a lot of M&A as a company over the last year, but some of these funds have certain destinations where they need to go into the ground. So maybe break down the different components of the financing, where it's going, what the budget is, those kind of components.
Yeah, so this financing really is going to support largely exploration and restart at Levack. That'll be the biggest component of it. Now, there will be a little bit of money spent. We're budgeting to spend on Crane Hill as well. We're still doing some engineering work out there and preparing that for a restart, but Levack is our focus. And the bulk of this funding will be looking at Levack both for exploration. We have a fourth drill that will be starting this month, so in the next week, at drilling off in the footwall at Levack Mine. So we'll have four drills turning there. We'll be probably by the end of the year moving away from the surface drills at Levack and have four underground rigs turning. We're looking for probably doubling our exploration budget in meters at Levack in 2026 over 2025. So that's going to be a portion of that, and that's really going to again support long-term production, based on a restart plan at Levack Mine. And then we'll start looking at other areas where, based on the work we have done and the work that's still ongoing this year, at potentially investing in the capital to get hoisting back in place again. When it hasn't Levack hasn't hoisted any ore since 2012, so that's going to be something we're going to be looking at and start investing the money to get that. Because once we can start hoisting material from underground at Levack, we can start development underground at Levack and potentially access or give us better drill platforms for some of these exciting footwall target areas like R2. So yeah, that's where the funds are going to be used, and we're still finalizing the budget for this for next year over the next few weeks. But pretty exciting. That's what it's going to be used for. As you mentioned, life financings, can't be used for acquisitions. That being said, people that are speculating that an acquisition may be coming down the pipeline based on our track record is probably not a bad assumption to make. We've made a number of really accretive acquisitions of non-core assets here in Sudbury, and that's still a big, big part of our strategy. I think there's still lots more for us to do on that front here in Sudbury, and we're working really hard at it. So, but we won't be using this cash to do that. And if anyone's kind of followed us, they would recognize, typically we're not doing deals that are, cash intensive. But yeah, we're gonna keep working on that, but we're gonna be using this money to really advance Levack and to a lesser degree Green Hill.
All right. Well, I'm glad you broke that down. Hopefully, that answers some folks' questions. Talks about where the funds are going, all the different exploration and development work underway at McCreedy and at Levack, and a little bit at Crane Hill. We haven't forgotten about Crane Hill. And for those interested in the acquisition side of the business, the company does have a track record and has acquired a lot of non-core properties from the big boys, but built your own portfolio of projects. Maybe just a very quick comment on that, Jason. You have an extensive portfolio of projects now. I don't think some people ascribe any value to that, but they're very valuable and you have experience on a lot of them and show a lot of prospectivity. So maybe just a quick comment on the overall portfolio of properties you now hold.
Yeah, so we've done, I guess there's four acquisitions we've really done now with Shakespeare. We've done which was Ursa Major Minerals we acquired. We acquired Lawn Can, which had primarily the Crane Hill asset, but also some other exploration properties around Sudbury. The what's called Project Nicholas Co., which we acquired from KGHM, which has Levack, McCreedy, Podolsky, and five other exploration properties and pretty large land holdings. And then the NorthX Sudbury property acquisition, which is a series of earlier stage exploration properties around the basin. So in total, over 500 square kilometers of very prospective ground all around the basin. So it's a great portfolio to have. We see a lot of these properties having synergies with existing properties where they're the footwall of an existing property we have, or vice versa, the contact portion of where we already have some footwall ground or adjacent to our Shakespeare on trend. So we're really still in acquisition mode, even though people say, well, you have a lot, but there's certain other properties that we see that have great synergies with existing infrastructure we have, or where we see footwall potential that hasn't been explored, or there's deposits that we think can grow a lot more and maybe are non-core to their owners. So there are lots more to do, and we have a great portfolio now with really McCreedy West producing Levack, Podolsky, Crane Hill, and Shakespeare permitted. It's a great position to be in, and I think we're in the very early days of a big bull market, and we're, I think, very well positioned for that. And as long as the market's there and we can do creative deals, we'll keep considering those.
All right. Well, I think we'll wrap it up there for today because there's a lot of news on tap that we'll be following up with as the year rounds out, whether it's the resource update, we'll be watching for how Q4 operations go at McCreedy. There's drill results that are coming out of both McCreedy and Levack. There's some work going on at Crane Hill, and always the potential for more acquisitions as you just laid out. So, a lot going on with Magna Mining. For those of you listening in, if you want to follow along with all the news, definitely click on the link below in the show notes. It takes you right over to the Magna Mining website, straight to their news section, where you can sign up for updates that hit your email inbox, or just follow along with all the news as it hits the wires. Jason, keep us posted. We'll get you back on for an update again soon. And as always, looking forward to our next conversation.
Great. Thanks a lot, Chad.